Hey, what's going on? This is Terrence Ray, and I'm back at you with another stock market update. What I'm showing right now on the screen is Tesla. Now, today we had another down day today. The S&P 500 was down about 72 bucks. Looking at the SPX. Normally, I would quote the futures, but the futures market has already opened up for the evening. So earlier today, we were down about a percent and a half on the S&P 500. The QQQs was down the most. They led the way down 1.83%. Uh, the diamonds, which was the Dow ETF, was down 1%. And then you had the IWM, the Russell was down 1.5%. The bonds were down 2.5%. So pretty much everything, even gold was down, which is, you would think that in this type of environment, gold would be exploding higher. But since it isn't, leads me to think that this is just a correction. And probably when we're done with this correction, the market, in my opinion, would then turn around and proceed to go back higher again. But until we get done correcting wherever that is, and I'm sure I have some levels for that, then we'll start seeing where we can get a turnaround. Now, let's go over some stocks and I'm going to go over some levels. I did place a trade. I've been trading the past week or so. I've been buying puts. I don't advise anybody to buy options. I think it's always best to sell options, to you, to be honest with you. But I have been buying some puts, right? So every now and then you'll YOLO it, right? But the majority of the time, I advise you to sell. And it's because of the particular account that I have. A larger account with more money, you probably can take those chances. Your smaller account, less risk, I would say sell options. So with that in mind, let's take a look at Tesla. Tesla, now I have some different moving averages up that I generally don't use. I generally use exponential moving averages, and exponential moving averages give more weight to the recent price action, whereas a simple moving average is going to place each candlestick within that time frame has the same amount of weight. So this purple one is a 9 SMA, 9 day simple moving average. So it's just taking the average of 9 days and it's just moving like that. So these moving averages can be used almost like as um, trend lines. So whereas you would draw a trend line would be, a straight line, obviously, these lines kind of bend and move with price. And so as we can see right here up at the top, we can see that I'm gonna try to zoom in right here. We can see right here at the top of Tesla, we had a down move, right? And then we pulled back and then we took out this low. And so from that point, I threw on some extendos, some Fibonacci extensions, and now we're looking at price levels. Now, this right here, the white line is the 50 SMA, and you can see it held and acted as support. See right here where it was resistance, and then resistance became support. So it held today. Now, that also coincides with this 100%. Now, as the day progressed toward the end of the day, the market moved a little lower. So after market hours, Tesla actually went down. I'm looking over here, went down to a low of 254 after hours. That 254 will place Tesla down here below the 50. So right before the end of today, I bought a put. I will show you the put that I bought. I came out about 57 days and bought the 245. I believe I paid 14.15 for it. So it's already up, a few bucks. Now, I suspect that that is the next level for Tesla on my Fibonacci ratio, right around here at 245. So I'm probably let's go ahead. I had said I'm gonna go over Boeing. You see that alert right there? It's been triggered, already hit, took profit on that put. So we're gonna put Instead of 245, I'm probably gonna put like 247. And I want to be alerted. Matter of fact, 247.50. I want to be alerted then. So less than, when it gets less to there, I create an alert. This will come to my phone and voila. And then that way I'll start, and then I'll start looking to take that put off. Now, I'm pretty confident it's going to get there. No guarantees. But one of the things I see, if we look down here at the bottom, the MACD is getting ready to cross over. In order for this MACD to cross over, see, it hadn't crossed yet. In order for these moving averages to cross over on this MACD, we need to get one more down day. And if we get one more down day, then that's where I figure we'll get to this area. So that's the first one I wanted to talk about. I also want to talk about the SPY. I think I had a put on in this maybe on Friday or last week. So we're gonna take a look at the SPY, which is the ETF of the S&P 500, and I'm gonna show you. I got levels on it as well. To note, 104 million shares traded on the SPY today. That is a lot. That's a heck of a lot of volume. That's crazy. And you can look, and because I have the volume mixed in with the chart, I'm going to darken it up so you guys can see it. I want you to see just how bananas that is. Because the reason why I want you to see it, because volume, as soon as I figure out where are the indicators, right there. So I'm going to darken it up. I want to make sure it comes through. So you should be able to see it now on the chart. And I'm gonna blow this chart up. Let's see if I want to move the screen and put myself inside the box. I'll leave it right there. So if you guys are looking right here, this is the volume. And you can see how the volume jumped today as opposed to the previous day, which was a big red candle. We had more shares today than yesterday. Matter of fact, let's be right and exact, because I want to make sure I show you how I determine that, and how I am determining that this market will continue to go down, at least in the short term. Right here you see volume, right? So yesterday's volume was 82 million shares, right? 82.5. Now, let's look at today's 104 million. So we were rocking on a down day. So if the volume increased on this down day, this gap down, we can look for the market to continue to go down. The RSI is not red, so we have not technically hit oversold on the RSI. Now the stochastic, my stochastic is oversold. So we could see a little chop right here. I wouldn't be surprised if we got to 430 and maybe it slowed down. Right into this area right here, we've seen some support. But I believe that it will, even if we get some little bit of chop tomorrow, I'm willing to bet that if sometime next week or Tuesday or Wednesday, because I could see we getting a little chop here and then it just resuming sometime next week to get down to this next level. So the next level, we are below this non-SMA. And you can see how price action is just kind of like just rode that non-SMA, and it already is below the 50. So we are in bear market territory. The MACD is just now both moving averages crossing over the MACD. We rocking. Now, this is, in my opinion, this is the best time to be trading. And I talk about this all the time. It's like, well, why you get so excited when it's going down? Because it is easy if you know how to trade. Because the market moves at such a velocity when it's going down. You'll probably, once you be around the markets for a while, you'll hear the saying, taking the stairs up, look at this, like the stair step method up, and taking the elevator down. I mean, gapping down and then rocking. And so when it's doing that, volatility is increasing. Look at the VIX. The VIX jumped towards the end of the day. almost close to an 18 VIX. So now we got something, we got some action. And so with that happening, this is where you can get your shorts in. Your premium sellers outselling premium, selling call spreads, throwing strangles on, iron condors. The whole playbook is open right now. So what I also wanted, so basically, tomorrow, I am looking for tomorrow for the market to, it may pull up and then chop and retest this level right here. Since you took this low out, this low coincides with this 1618. This now is going to become resistance, right? So it breaks that level. Now tomorrow, let's see if it hovers around this level right here, or does it just continue to take off? Let's take a look at same thing with the Qs. I think the Qs chart looks similar. You can see right here, same thing, gap down. You could look at the volume down here. I mean, we rocking. We still need to take this low out for the Qs, right? And we want to see the market get on down. Our next level is right around 348, 349. Let's take a look at Boeing right down to my level. I had the alert set. I took my put off before. Like I don't have to, like some people would try to wait and then squeeze every little bit out. I took mine out before. Like I didn't hold the put until it got completely there. I don't know what's going on with I know it can't be my computer. But so as soon as it pulls up, like I said, you can see right here, here's my level at, actually to be exact, 198.40. But I like nice whole round numbers. So I figured like 200 would be the mark where I wanted to get out. And I already took my put off in Boeing. I think I talked about Boeing maybe either the last video or the video before that. You guys gotta subscribe and keep up with the videos, because I'm giving price levels out, and if you watching, you getting paid. And I even show different kinds of trades. Some people, depending on the size of your account, you may want to you can short stock outright. Um, you can sell calls. It just depends on what size account you have and your risk appetite. The higher probability trade would be to sell the call spreads. Now, at this moment, you shorten into the hole, right? Like you in the hole. It's on the RSI. If you look over here, the RSI is at 24. So it is oversold at this point. Boeing is oversold. You see it's green. That's basically saying like green, like buy, right? Because it's oversold. So me personally, I will be looking. I'm not getting long this, even though I do think we can get a pop. I just don't like when something is crashing down like this. I don't. Me personally, I don't like trying to get in the face of this and catch this knife. Not when I got another level down here and I don't know how fast. Now you're gonna do something like this. I would be a buyer. I don't know. You could probably buy a call spread somewhere in here and look for a quick pop maybe. But now we're going below the 200 SMA. It is most certainly in my opinion in a bear market. Like it is down. And so if we want to look at, I had some more stocks that I want to take a look at Deere. Deere announced layoffs today. This is all part of, in my opinion, that this is the plan, right? Because so you had we had COVID-19, and then we had the lockdowns, and then we came out of the lockdowns and we had a lot of stimulus put into the market. Then we saw inflation. So we seen prices go up on everything. Not only did inflation, like prices go up on goods, prices exploded in the housing market. prices of even in equities, prices went up. Now this is just a 6-month chart, but if I was to zoom out, something like 3 years and look at the S&P 500, let's see what deer look like. I don't know what deer look like in the 3-year chart, but I know what the overall market look like in the 3-year chart. This is a little bit irritating. So if you're looking at deer, if you're looking at the S&P 500 on a 3-year chart, you'll definitely see that coming out of COVID, the market just continued to march up, along with, as inflation went up, equities went up, assets go up. So the FOMC, the Federal Reserve, they're trying to bring inflation down. And in the process of trying to bring inflation down, raising interest rates to try to do that, you're going to see companies lay people off. It's inevitable, and we're beginning to see it. A company like Deere, that's in the in the manufacturing, like their products manufacturers use, and construction and tractors and stuff like that. So you got, once they start laying people off, then it's going to be like a domino effect. So they announce layoffs, and that's where you get this big red candle from. Now, how much of this market is going to correct? Like, how much of this, from this low up to here, how much of a correction are we going to get? That's the question. And that's why I wanted to look at, if I had to make I wouldn't even be in here trying to trade this. It only got 2 stars on liquidity. So on the TastyTrade platform, like one of my, if you go back and you look through my videos where I talk about liquidity and how important liquidity is, I don't like to trade stocks that don't have 3 stars on the liquid. So you look over here to the right, you'll see it got 2 stars, 2 out of 4. I don't really mess around with it if it don't have 3 to 4 stars. Now, not with options. Now, stock, maybe you can own stock. That's something totally different. I don't know how liquid you needed to be to own the stock, but it did have 2.2 million shares trade today. But I like to stick to the stuff that everybody is trading. Let's take a look at Apple. I think Apple, I looked at it earlier, and Apple actually looked like it tried to turn up a little bit today. No pun intended. Right here, I want to say Apple was green early in the day. You can see this wick right here. So Apple was up here right around, what was the high of the day? 176.30. It did turn green earlier, and then the market just came down. So it just looked like, this is almost like an inverted hammer. And so tomorrow I expect to see Apple down some more, moving toward this gap right here. Now this gap is gonna, I believe, act as some type of support for Apple. And with that being said, we also, not only that, we have the 200 SMA right here. See, so me personally, I wouldn't look to get long Apple at all till up right around what, anywhere in between here, 170 to 165. If you're gonna try to, and that would just be a trade, to be honest with you. I think the market is in trouble right now. I really do think the market is in trouble. So going into tomorrow, my game plan is simple. I'm watching the SPY, I'm watching the Qs, and I'm watching Tesla. I'll watch Boeing as well, even though I think Boeing can and will go lower. It's low enough to a point to where I just want to pull back. I want to see a pullback in it. I'd like to see Boeing pull back a little bit more and then short into the pullback. Right now, I think Tesla, next levels, we looking for 245 on Tesla. And the SPY and the Qs, we're looking for those to continue down. On the intraday, this is the intraday of Apple. which I had pulled up earlier. You can see it moving down. This is the 30-minute. And so you can let's take a look at intraday wise. Let's see how Tesla ended the day. Now this is a 30-minute three, and I got my volume profile. So you see a little support level right here. So it did look like maybe we'll see how it open tomorrow. We could get a little move up, or it could just chop a little bit. We could get a little chop tomorrow. Let's see if this level right here on the volume profile on the intraday, if it hold. But either way, that put I bought goes out. Let's go. That was Apple. I'm sorry. Let's look at Tesla's. No, that was Tesla on the intraday. So let's go look at the option tab. So right here, that 245, I got 57 days on it. So I got time. I got time to be right, time to be wrong. And that's one of the reasons why I went out so far. Some people will buy. So I go out far enough, I pay up a little bit so that I don't be so that I'm not in the way of theta decay, right? When you trade short dated options and you have to be right away, because if not, then your options will decay at a very fast rate. That's theta decay. But if you go further, the further you go out in time, the more time you buy, it takes less of the time for you to get back for the theta decay, right? So like theta really starts decaying really fast right around 23 days left to expire on the option. So by me going out 57 days, that's going to give me roughly about, about 30, 34 days before I see a rapid decrease in, like, once you get to that 23rd day, you'll see it just start dropping, which I won't hold it that long anyway. I think that I'm going to be right within a week. I'll know within a week or two whether I'm going to be right or not. And one thing you can see on this is why I like the TastyTrade platform, why I will come on here and look. So you can come over here and let's hit probability of touch, right? It says touch percentage. This 245 put has an 85% probability of the market touching it. And that's all I need. So that lets you know at 85%, that's a pretty good. So I try to use options when I'm buying, when and if I buy them. I like to be right around the 50% mark at least. And that's anywhere within the expected move. And if your technical analysis is halfway decent and you're going with the trend, I like to go with the trend when I'm buying options. If I'm selling them, it's a lot of other different factors. You know, I do think we can get on down here and get a touch within the next week or two. And the odds of, I got a good probability of touching, bouncing somewhere within this range, right around this 245 to this, let's call it 270, right around in this range right here. I think we got a high chance of bouncing around over the next month or so. So that's why I take my chances with that put. Couple that with my Fibonacci extensions, right? So hey guys, hopefully you got something out of this video. Hit that like button, hit the subscribe button. You want to open up an account with TastyTrade. Link will be down in the show notes. And also, I'm going to start doing some trades on the platform starting next week. So you will be able to see me come on here instead of just modeling it. Like, you're gonna see me, I pull the trigger and do some live, or at least, because depending on the time when I do the trade, I'll start showing a little bit more of some of the trades that I have open in this platform. All right. So with that being said, be safe tomorrow. Tomorrow, I will let the market open up, wait that first 30 minutes, see where it's doing. And that's if you're day trading. If you're trading like position trading, which is for the most part, that's what I do, then you're trading off of whole candlesticks anyway. So what you want to see tomorrow in Tesla, you want to see it come below this 50. we get a breakdown below this 50, we off to the races. All right, guys, I'm out. Peace.